Okay. Let's solve another question of income from business. From the following profit and loss account of Mr. M for the year ended, compute the gross total income. Okay. Salaries and wages, it is an P&L item. To rent, P&L item. To advertisement, P&L item. To traveling expenses, P&L item. To bad debts, P&L item. To general expenses, P&L item. To provision for taxation. Now provisions to taxation will be is disallowed. Okay, it will not come here. It is application of income. Okay, so you this provision for taxation, you will remove the effect. So you have to add back. Correct? Yes. It's an expenses which you are not supposed to show, and you have shown the expense. Because of this expense, your profit is been understated. So you have to add provision for tax, add back. To additions to office building, it is a capital expenditure, so you will add back. To sales tax paid, it is paid, so it is allowed. You're not supposed to do anything about it, it is allowed. Okay. To income tax paid, 1,50,000 application of income, you have to remove this. So you have to add 1,50,000 to net profit. Okay. So whatever items is there in the debit side of your P&L account given, and it is not supposed to be in, it is disallowed, so you have to add to the profit. Okay, items which are there in the credit side, which you are not supposed to be there, which you are not supposed to show, that you will subtract. So debit side you will add, credit side you will subtract. Okay, so now by gross profit, okay, interest on FD is given. So interest on FD, this is income from other sources, you are not supposed to show here, so you will subtract 10,500. Bad debts recovered, not allowed as deduction. Okay, so bad debts recovered, it was disallowed earlier. So this income, this 20,000 you have already paid tax on, so you don't have to pay tax again. So this 20,000 you have to remove. Okay, you have already shown this 20,000 as income in the previous year or whenever it was disallowed. So this 20,000 again you have to add back. Refund of income tax, it is just a refund. The tax you have paid, it has come back. It is not an income. So you have to subtract it. Okay, so interest on FD, subtract. Bad debts recovered, disallowed earlier, subtract. Refund of income tax, subtract. Interest on income tax refund, again subtract, because this will come under income from other source. Rent received, I am assuming it is rent received from house property, so subtract 60,000. Winning from lottery, this also subtract because it is income from other source. Okay, now let us see the adjustment. Opening stock of rupees 25 lakh and closing stock of rupees 20 lakh, both undervalued by 20%. Okay, I'll be explaining this in detail here. Okay, so now this is a trading account. Okay, so opening stock is written here 25 lakhs, and closing stock will be written this side, right? Just a second. Closing stock is written here. Okay, suppose 20 lakh. It's given 20 lakh. Okay, and both are undervalued by 20%. That means if the opening stock is 100, you have written 80. Not 18, 80. Okay, if closing stock is 100, you have written 80 because both are undervalued by 20%. Okay, now, so if like this 80 is this 25 lakhs. Okay, so opening stock is undervalued by 20%, means instead of showing 100, you have shown 80. So this 25 lakh is 80. So how much is 100? Just do cross multiplication and find out. So yeah, 25 lakhs divided by 80 multiplied by 100. So it comes to 31,25,000. So your opening stock should have been 31,25,000, but you have shown 25,000. 25 lakhs. You have shown 25 lakhs instead of 31,25,000. What is the difference? The difference is 31,25,000 minus 25 lakhs, which is 6,25,000. Okay, 6,25,000. This should be, this expense you have not shown. You have purchased, no? This opening stock is expense, right? The 6,25,000 expense you have not shown. You show it now. So you subtract this from your profit, because this is an expense which you have not shown. Show it now. Subtract 6,25,000 from the profit. So if there is what do you say, if there is an undervaluation of opening stock, you will subtract the difference. If there is overvaluation of opening stock, then you will add the difference. Okay, similarly for closing stock also, it is undervalued by 20%. Okay, so closing stock, like, it's like income. It's not an income, but the effect is of income, right? It is on the credit side. So now if 80 is 20 lakhs, how much is 100? So let's calculate. 20 lakhs divided by 80 multiplied by 100. So it comes to 25 lakhs. Okay, so your closing stock should be in 25 lakh, but you have shown 20 lakh. So 5 lakh income you have not shown, right? The difference is 5 lakh. So this 5 lakh you will add. When closing stock is understated, okay, that means your gross profit is also understated by the difference, 5 lakhs. So 5 lakh you will add. Okay, and when it comes to opening stock, when opening stock is understated, you have to subtract the difference. When closing stock is understated, you have to add the difference. So 6,25,000 you will subtract from the net profit, and 5 lakh you will add. Okay, this I have explained in detail in class 2. You can check the video. Okay, next, advertisement expense include cost of neon signboard. We have done this in the previous sum also. 50,000 is capital expenditure. So this expense you are not supposed to show, you will add it. Sales tax of 20,000 for previous year was paid during the year, and it is not shown in above profit and loss account. So this 20,000 you can claim expense now. So this 20,000 you can subtract from the net profit. Okay, general expense include rupees 40,000 drawn by the assessee for personal use. It is a drawing. Okay, so this drawing, it is in general expense. This 40,000 is in general expense, which is not supposed to be there. Okay, so this 40,000 you will add. Okay, rupees 5,000 being cost of installation new telephone. Okay, 5,000 is allowed. This amount is allowed for installing new telephone. Telephone expenses, any expenses related to telephone is considered as revenue expense. It is not considered as capital expense. Okay, because telephone expenses, even installation of telephone, is not considered as capital expense. It is considered as revenue expense only. Okay, so 5,000. So any expenses related to telephone, you can show it in the P&L account. Okay, installation of new telephone, this 5,000 is not considered as capital expense. It is considered as revenue expense only. So 5,000 is shown in P&L account. Correct. It is correct. So you are not supposed to do anything about it. No effect. Okay, it is there in the P&L account. Yes, it is supposed to be there. So yeah. Now next, 12,000 being the fees paid to chartered accountant in connection with income tax appeal before. Okay, this also, any fees paid to chartered accountant is, that is, this is allowed. Okay, this 12,000 is allowed and it is shown in the P&L account. So whatever is done is correct only, so you are not supposed to do anything about it. Okay, so yes, in this question general expense include only this 40,000 does not belong to P&L account. 5,000 and 12,000 belongs to P&L account. So 40,000 effect you will remove by adding. Okay, 5,000, 12,000 you are not supposed to do anything about it because it belongs to P&L account only. Okay, so let's start solving. I'll start from here. Okay, income from computation of income from business. You will be making 3 columns: particulars, amount. Net profit as per P&L account. Net profit as per P&L account is 31,70,000. Add expenses disallowed. Add expenses disallowed which is shown in the P&L account. Expenses to be treated separately. And also income which is included is taxable under income from business but not shown in the P&L account. Okay. I'll leave few lines and then I'll write less income to be treated separately. Exempted income. And allowed business expenses. Okay. So let's start solving. Okay, salaries and wages, P&L item, rent, P&L item, advertisement, P&L item, traveling expense, P&L item, bad debts, P&L item, general expense, P&L item. Provision for taxation is not a P&L item. I mean, it is a P&L item, but it is disallowed. So provision for taxation. Provision for taxation. The amount is 3 lakhs. Okay. To addition to office building, capital expenditure. So that also you will add. Addition to office building, that you will add 3 lakhs. Next one is sales tax paid. In the exam, sales tax paid will not be given. Instead of that, 2 GST paid will be given. Okay, if GST is paid, you are not supposed to do anything about it. It is paid and it is allowed. Okay, GST paid is allowed in a year in which it is paid. Okay, if GST is due and paid before filing the return, still it is allowed. Okay, so 2,50,000 is allowed. Okay, next, to income tax paid. The income tax is an application of income. So income tax paid, you will remove it. So you have to add. Income tax paid 1,50,000. Okay, if in the question it is given to GST not paid, okay, then you have to disallow it. Only if it is paid, then only it is allowed. Okay. Next, in the credit side, you can see interest on FD. So it will come under income from other sources. So you have to subtract this income to be treated separately. Okay, you have to subtract. So interest on FD, you have to show it in income from other source. Okay, interest on FD is 10,500. 10,500. Income from other source, I'll do it later. Okay. Bad debts recovered, not allowed, disallowed earlier, 20,000. This also you will subtract. Bad debts recovered, disallowed earlier. So 20,000. Okay. Next, refund of income tax, interest on income tax refund. Again, you will add. Okay, rent received also you will add. Winning from lottery also you will add 35,000. So income tax refund, interest on income tax refund, interest on FD is income from other source, interest on income tax refund is income from other source. Okay, and then the other things were, the amount is 10,000, 1,500. 10,000, 1,500. Next one is rent received. This is rent received from house property. Okay, so this is income from house property, 60,000. In the question, now in the exam they'll clearly give rent received from house property. That is what I believe. Okay, next, winning from lottery, 35,000. $35,000 is shown in the P&L account. 35,000 you have to remove. Okay, now let's see. Rent received is 60,000. Winning from lottery will not come here. Forget. Rent received, winning from lottery. Okay. Okay. So opening stock, closing stock, which is undervalued. The difference is 6,25,000 and 5 lakh. 6,25,000 you will subtract and 5 lakh you will add. So write closing stock overvalued. No, sorry, closing stock undervalued. Closing stock undervalued 5 lakh. Opening stock undervalued. Opening stock undervalued 6,25,000. Okay. Next, advertisement expense include cost of neon signboard 50,000. Okay, so 50,000 it's there in advertisement expense, which this 50,000 is capital expenditure. So you will add neon signboard 50,000 the way you did in the previous sum. Next, sales tax of 20,000 of the sales tax of 20,000 is paid during the year and it is not shown in the P&L account, so you have to show it. So you will subtract this 20,000. This is an expense which is allowed. So sales tax paid 20,000. It was disallowed earlier because earlier it was not paid, now it is paid, so now it is allowed. Next, general expenses 40,000 drawn by the SSC for personal use. So this drawings 40,000. You will add 5,000 is the P&L item. It is there in P&L, so it's correct. You are not supposed to do anything. 12,000 is also a P&L item. It is there in the P&L item in general expense. So that also you are not supposed to do anything about it. Okay. And with this, we have computed income from business. Let's add all these items. 3 lakh plus 3 lakh plus 1 lakh 50, 7 lakh 50. Wait, 3, 7, 8, 8 lakh 90,000. Correct? 3, 4, 3, 6, 7, 8. 8 lakh 90,000. Yeah. And let's add these items. So 10,000. Wait. 10,500 plus 20,000 plus 10,000 plus 1,500 plus 60,000 plus 35,000 plus 6,25,000 plus 20,000. It comes to 7,82,000. So what you get is income from business. Okay. So 31,70,000 plus 8,90,000 minus 7,82,000. So 32,78,000 is my income from business. Okay, in the question they have asked to solve compute gross total income. So let's compute income from other source and income from house property as well. Okay, so income from other sources. Two columns, particulars amount, Okay, so first one was interest on FD 10,500. $10,500. Next, interest on income tax refund 1,500. Next, winning from lottery 35,000 net amount it is. So 35,000, sorry, the TDS is 70%, right? So 35,000, sorry, the TDS is 30%, correct? So this 35,000 is the net amount, that is 70 into 100. 35,000 divided by 70 into 100. It comes to 50,000. Okay, so while calculating in income from business, you will remove 35,000 only. You will not like deduct 50,000, because in the PNL 35,000, and that effect we are removing. Okay, but while showing an income from other source, the income is 50,000. Okay, that's it. Rent received 60,000. I'll show it as income from house property. So this is 60, 61, 62,000. Okay, this is income from other source, income from house property. Two columns, particulars amount, rent received. This is my GAV, municipal tax, fair value, standard rent, all that is not there. So rent received itself is my GAV, and rent received is 60,000. Less 30% standard deduction. So 60,000 into 30%, it comes to 18,000. So 18,000 is my standard deduction. So income from will be 42,000. This is income from house property. Oops. Okay, so computation of total income, computation of gross total income. Two columns, particulars amount, income from salaries, income from house property, income from business and profession, capital gains, income from other sources. Income from salaries is nil, income from house property is 42,000, income from business and profession we have calculated 32 lakh 78,000. Capital gains not there, and income from other sources 62,000. So this total is gross total income. And this is what is asked, gross total income. So 42,000 plus 32,78,000 plus 62,000. It comes to 33,82,000. Okay. Yeah. Now in the question, suppose in the P&L account, in the credit side, it's written income from smuggling. Okay. So in your P&L account, if it is given income from smuggling in the credit side, in India, income from all legal, illegal incomes are taxable. So income from smuggling is also taxable under the head income from business only. Okay. So if income from smuggling is given, so it will be included in income from business. Okay. So income from smuggling is taxable under the head income from business itself. Okay. Yeah. So that's it, students. Have a great day. Thank you very much.